I need to make for sure that I'm live. I've I was I was live for like an hour, but I don't know if it was actually recording. My Wi-Fi is bugging today. Okay, it says I'm live now. Okay, let's just retry this whole thing. We're just restarting. We're just restarting the stream. I wish I could have been live for a little bit longer, but it's my Wi-Fi and it's school. It's gonna happen sometimes. I'm gonna try to be live, especially if I'm trying to go live for as long as I have been. Something's bound to happen. All right, I want to watch this. I want to watch this, and then I want to watch this. But before we do that, I kind of just want to hop on the charts. Just want to hop on the charts. I'll pull up Discord. I'll put it over here. I wanna look at the charts, and then I wanna. All right, so if we look at what just happened, big sell off, consolidation. What do we have here? We have a dealing range established from high to low. Equilibrium of this range is in line with these new day opening gaps. I don't know if we'll get a retracement. Oh, we do have CPI. We have PPI today. Sorry, PPI. We have PPI. So for PPI, I would say PPI is a little bit more predictable, in my opinion. Not saying that I'm gonna try to predict what we're gonna do, but I found that CP or PPI will usually it can distribute towards the already existing draw if we already have had manipulation. Do we have any form of divergence here? No, but I like how London has taken. We've taken Asia range within London, and now we're starting to see displacement. And now this new day opening gap is starting to kind of hold. When will you start doing prop firm challenges? I could not tell you. Whenever I feel like I'm ready, which is probably not. It's not something that's on my mind right now. You know. All right, today is a Friday. So with that being said, where did we open this week? Or how is this week playing out? How could this week possibly finish? We're gonna have to delete all the. Oh shoot! I know. I think I had some nice annotations in there that I wanted to. So as we can see, we had Monday, Tuesday, Thursday, Wednesday, kind of not so much consolidation, but we had Thursday reversal. Like this is a reversal. So I would bet that we would likely create a fair value gap here between this low and then something like this today. But if we don't create a fair value gap, then this was just a scare. If we don't create a daily fair value gap here, or even if we do, I feel like this is just a kind of do something to spice things up in all-time highs to induce short selling into the market. I'm holding the bias that we're still just going to be making new highs. So I'm going to be marking out this daily fair value gap. That's going to be an important level. And then this high we're almost at fair value. And then I would mark out constant encroachment this wick. And also constant encroachment of this fair value. So those two levels I'm interested in, possibly. If you look at ES, I'm really only interested in this level. Even then, there's not really like a fair value gap that we have. If we see we have a sweep, if we look at the previous candle, we're rejecting that. So that to me shows there could be something here. And if we get a change in state delivery, this could hold as a bearish order block. But I think we're going to consolidate for a little bit. And then in August, that's when I'm thinking we're going to get something, if we are too. We have had change in state delivery on, we have closed below this. So this could act as an order block. I do like this candle because it doesn't have a body. So I think we'll likely try to return to that at some point. It has no wick on it. Let's look at gold. Gold displaced yesterday. I mean, I'm sure everything displaced yesterday because of dollar. I don't know. These lows still look a little bit too clean for me. We have rejection block. Do we take it? No. So I'm assuming more displacement. Was that a 4 hour? We could inverse this 4 hour. Overall market maker buy model protocol. How did this get into my indices tab? I swear I had this in commodities. Let's look at oil. Just because. What's consequent encroachment of this wick? Nah, not so much. Gorgeous. Do we reclaim this? Yeah, we reclaim that as well. Wait, what was that? It also doesn't feel like a strong magnet. I like these highs on the bonds. Well, that's T-bonds futures. I don't understand why all my watch list changed. Alright, this was exactly what we want to see. Monday put in the low week. GU smash buy side. YM. I feel like we're just building up. Trend line. This is such a tough market environment right here. For any asset. I do want to note this level here. That's where I would refine this fair value gap too. Yeah, I want to see price draw up into this. We do have failure swings. All right, now I'm expecting distribution lower. Possibly. And then for manipulation higher. I do want to see what news does. I just think we should have had responsiveness at this order block, and we didn't. So I would think that we would likely just get distribution. I don't know. I don't want to put myself ahead of PPI. Also, PPI is it's less manipulated than CPI in my opinion. But I would like us to take this low here. Like, if we are bullish, this probably would have held. I still can. But I would think that buying would occur at that level again. Am I for sure live? Yep. Dude, my Wi-Fi was I was live for like a whole nother hour and didn't upload any of that. You're talking about this one? I'm looking at this. Well, let's see what this does. This news release does. Overall, this is just a consolidation. I'm gonna mark out that level, and then I thought I had this marked out. We're right at True Day. What indicator am I looking for? Usually I have another indicator. I think we're likely we'll see just based off distribution lower, just based off of this market structure, in my opinion. Got about 3 minutes. We have daily levels below market price right now. Daily fair value gap, constantly encroachment, and then this wick constantly encroachment are the levels that I have. Oh, I was trying to look for new day opening gaps. We're currently operating around a new day opening gap. It's very small. These new day opening gaps are like one tick, if that. For news, I'm not gonna look at any time frame lower than 5 minutes. Until we've entered 9:30, I'm not looking at a time frame lower than 8:30. I've done that mistake before. Lower than the 5 minute before 9:30. That's also what ICT suggests. I remember, like going into one of his live streams and like I was trying to use the 1 minute before news, and he was like talking about how to not use the 1 minute before news, only use the 5 minute, and now it's like in my brain. It was a good lesson. It was a lesson to learn then. All right, we have about 14 seconds to the hurrah. I'm not gonna lie, bro. PPI look. Oh, I didn't even see that, bro. Of course, I didn't have the indicator. That. Bro, I didn't see that. I wish I could have seen that, cause that's all. I've been backtesting that so much, especially recently. If we're in a new day opening gap with news, we can distribute, and that's exactly what PPI will normally do. Just distribute us to the draw on liquidity. Yeah, I want to see how this 5 minute wick, how this 5 minute candle closes. But look at where we distribute from. A random level. I'm gonna pull up YM here just real quick. Imagine YM just like distributes higher. All right, yeah. Look at this constant encroachment of a new day opening gap, or a new week opening gap. Woo! Look at that. Straight liquidity sweep. No way we get a bullish close on this. Dude, I might have to start trading PPI. But like if you get it wrong, if you get PPI wrong, bro. We formed the craziest bullish SMT. I honestly don't care about SMT. And we took this low here. I think this imbalance today is most likely. More likely to occur than us displacing back lower. Cost per encroachment of that 1 hour fair value gap. Pretty much delivered to. Look for these highs first and then this imbalance. If we show displacement. I kind of want to ignore this wick here. Like, I don't even want to use it. I just want to act like it's not there. So we could still come down and sweep this low. In my opinion. Yeah, I would. That's a possibility. But let's see. I want to look at previous PPIs. Do we have any manipulation ones? Do I even have any other PPIs noted? I don't know. None of them have been like this, though, where we just have straight, like, a manipulation wick. I don't have that much data. It's kind of hard with like a wick like this. I think it's best just to ignore it. Like it doesn't even exist. It's like we're really just respecting this 5 minute imbalance. I think the draw on liquidity is likely this high. $15 minute imbalance too. I want to backtest a few days before market opens, and then once market opens, we'll hop on the charts. Dude, I got so many tabs open. We're at 5/16. 2018. The data low will probably be hit. It definitely could. We'll see. I want to wait for market open for sure, for sure. For sure. We deliver right to that new week opening gap. Oh. Also have a daily order block within this daily imbalance still. Sorry, it has to be done. I gotta delete them. Nice delivery off that order block. And I hate how it spoils the next day, but it looks like we also get distribution. How well we're respecting consumer encroachment. We put in a swing high. Swing high. Order block delivered. Damn. Dang. Thanks, bro. My nose has been so messed up today. It's just been like May 15th. I just ruined the whole month here. Oh, we actually take this high here. Wait, do we on NQ? Yeah, we do. So we have SMT that forms here. Ten a.m. we get a run up into that. From this imbalance. And then we run back into that. Oh, who was asking about my new week opening gap indicator? Below true day. We form an SMT here with ES. Nine thirty we get manipulation. SMT with ES. SMT with ES below midnight open. We never actually draw into that. Really, there wasn't that many entries, you know? 950 macro reversal. Or 10. Did I say 1050? We really don't get any fair value gap here. Oh, I guess we do here. Ah. Yep. We have inversion. Look at the bodies of that. Oh. Redistribute. Oh, look at that. Oh, with this fair value gap. We barely wick outside of that. That's a volume imbalance. Oh. Wow. Just wow. It's satisfying to see. All right, so this day it looks like we have distribution. Oh, look at that imbalance that gets targeted. Oh my gosh. So in this case, we're well below true day open. We end up displacing, so only be looking for shorts or longs. I want to edit this to only red folder news. I don't know why I don't have that. Oh, we're only on Thursday. We leave equal lows on ES. Oh. At this point, we left equal lows. We then purge. Yeah, I might use 9:30 or True Day Open as like my within my model. Interesting draw on liquidity. Just a nice buy model there. Straight up to that new straight up to that. Like, it's you can't deny it. You can't deny it. Oh my gosh. Big gap. Big new week opening gap. Where, what 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 random wow, what random level do we open at though? That's wild. That's crazy. I think I should just start playing out like weeks at a time. Look at the top end of that new week opening gap. And that new day opening gap. High resistance. Above true day. Like they're definitely a factor in the market. That's crazy. Where did we displace from? All right, now it's Friday. We've gone above that new week opening gap. Reversal. There still was a wow. What's going on in the economic? What's going on? There's got to be something. Two like huge gaps. Oh, we have big divergence here. We have a Wednesday midweek reversal. Create low resistance here. ES on Thursday comes all the way back down and almost takes Wednesday's low. And we have SMT at Tuesday highs. So we have SMT here at these Tuesday highs. And then Thursday, we have a deep run. Wait. And Wednesday takes Tuesday the 15th low. And we have another SMT there. Overall, there's divergence here. SMT there. Displacement. Wednesday low of the week. Fair value gap in, fair value gap out. Below true day open. Expansion. Buy side taken. Come back down. Retrace. Displacement. Notice what Friday does? Friday doesn't do anything. New week opening gap. New week opening gap, constant encroachment. New day opening gap. New week opening gaps where we close. We get manipulation above 930 expansion. SMT. High resistance signature. Above true day open. Wow. Look at the bodies. I think the 1050 macro is honestly easier to trade. Wow. Monday or Wednesday reversal. Consolidation, boom, manipulation. Wednesday. What do you think of NQ right now? Because it was really bullish, creating all-time highs, and yesterday it went down. I think NQ is gonna look to take these highs today. Oh, bro, we almost got a sweep of that. And 75% of that wick offered support. Right now, I'm looking for this high. And then we could see something like this, honestly. We're above true day, so I don't know. I would feel comfortable taking shorts. Yeah, I want to see us distribute towards this high. And then my eyes are also on this imbalance, but overall, if I were to trade this, I would more be bearish bias. We're not bearish bias, but actually, we already had manipulation. I would want to see how we actually open up in relation to this. What's the Well, we already stung into the daily fair value gap. My eyes are more on this. This is an hourly imbalance constant encroachment. This is the daily imbalance constant encroachment, and this is the daily wick. Overall, though, we just had a large range day here. How many points? We just sold off 600 points. So I'm expecting consolidation. And then I think we could make a fair value gap here on the daily. Let's see if that is the case, though. There was something like this in December of 2023. Let me just pull it up. Actually, yeah, I'll pull it up here. Might have been. It was January. That it was January. What was it? Was it this? No. Wow. What does this daily candle look like? What does that daily candle look like? The 25th. Because that is the best. Those are the best trades. Let's look at this. The 5th. Or was it the 9th? Where is it? Ah, it's cool. It's cool. It's cool. Oh, bet. I didn't know that was a thing, honestly. Appreciate it. Let me see if I can find it somewhere, but I don't think it's that relevant, but it pretty much was. We had something that kind of looked like this to where we just inversed it. I don't know, I'm not set on a bearish stance yet. Like, I think this is just a completion of a sell model. Oh, wait. There is a week. There is a week that looks. It's well. Let's just look at this. Thursday reversal. Friday, what do we do? What did we do Friday here? Consolidated. Consolidation. There's at least one of these in I remember a Thursday reversal at least one time. Here, Thursday. And then Friday we actually expanded. Dude, I have no clue what's up with me, bro. I like can't. My nose is just so messed up today. Yeah, I was live earlier, and then like my stream just stopped because my Wi-Fi. Why is this red? What is it? Oh, I think I was saying consolidation. All right, I'm looking at this candle here. If this candle fails, I think we're heading to this. I think this candle should offer buying again. It's right at true day open too. Satan's in your room? Hopefully not. Hopefully not, bro. All right, we're about to open in 8 minutes. What's more favorable? Well, we come back down. We swept all this, but that's just really a news wick. I'm kind of going to ignore that. We came back lower. We almost took this low here, but we didn't. We created equal lows. So we'll see. Dude, there's something. I don't know. I went for a hike yesterday, bro. It was so nice. It was so nice. Yeah, I got outside yesterday, and I don't know, maybe like some pollen or something. I think we're in a sell model here. I think we might want this low. I don't know. I I finished that 2022 mentorship in like 4 days, 3 days, while taking notes. And honestly, I feel like if I go back through it, I'll be able to find so much more. I like the 2023 mentorship. I think that the 2023 is the best. That's just me. I wish I was there for it. I wish I was there for it. But it's cool. Like imagine ICT posting on Twitter every day. You check that, and then you check other people. Like there's no way. Like your chances to succeed are so good. Yeah, have it in Notion. I could share it, but I'm not going to. I have all of my notes. Like what are these notes? Some like if I was in there now, I would be all over this. Like there would be so much more notes. It's one of them bear flags. So I want to see this fair value gap. Yeah, for sure. I really don't. I I honestly don't think that you get anything out of anyone else's notes. Not a single thing, except for maybe inspiration. But even like when you see other people post their charts on Twitter or something like that, I really don't think that you get much out of that. All right, market's about to open. I want to see where we manipulate. For sure. Appreciate it. The backtesting stage. I don't know. I've just been going live just because, and I just want to inspire other people to like backtest. I don't know. I've been backtesting just to chill, and also I tape read. I used to tape read, but then I'm like, yo, just go live when you study. That's what I've been doing. All right, we're disrespecting this imbalance before market opens. Market just opened. Stock market just opened. Oh, let me get my tape reading up. Yeah, it looks like we're heading to these highs and then this imbalance. We have a fair value gap made at 9:30. Let's see if this offers mitigation. We have an internal rate of sell stops here. Opening range gap right here. Yeah, I'm really looking for this high here. What are we? We're within a buy program right now. Balanced price range. I want to see displacement. I'm expecting NQ to catch up here. We have just swept the high though. Nothing to trade though yet. Wait, did we not? We never created that 930 fair value yet. I haven't taken anything. What's good, OJ? We also do have. I want to wait for displacement. This could be a sweep of this high. We could look for this right here. Over this, I would subscribe to bullish bias for now. Oh, I was saying we have both buy side and sell side taken, so now we have a dealing range. We're referring to equilibrium, implying that we're probably in a consolidation as of right now. Which looks like we are. Consolidation phase of price. We want to be looking for expansions. We don't want to be looking for consolidations. So therefore, I want to wait for some form of short-term displacement. If that doesn't happen, then there's nothing to engage in. And this is market open. I'd rather wait. Okay, I think we're heading to buy side. We just closed above equilibrium. So now I'm expecting to see buy side. Look how well that held. Let's see if we print a fair value gap here. We could consolidate. Look at the wicks showing respect. Find support at equilibrium. Notice how deep premium of this is acting as short-term resistance. And then deep discounts acting as support. Alright, now I'm expecting buy side. Expecting these highs. Alright, we should snap here. Allow an ES. Whew. Oh wait. I'm staying away from this. Personally, I want to see buy side though. Literally not one fair value gap yet. No form of displacement yet. Alright, this would be problematic. We do have SMT. How are you? I'm chilling. How about you? How about you? Oh. Oh. Yeah. Now I think we spool. Where we found support. It's that DRT. This is probably going to be a breakaway. Because we have this inversion, we have this breaker or order block, or, sorry, mitigation. And I just want to see snappy delivery. Yeah, good. Looking for opportunities and started learning the ICT 2023 mentorship is the best. Like I wish I was there for it. Yeah, if you go through his Twitter, there, I said it. There's a link in my Discord. It. You can go through every tweet. Next possible draw on liquidity. Man, it's gorgeous. Buy side delivered. I think this will stay there. I want to at least see this imbalance. And after that, just consolidation. Oh, maybe that gap right there. Maybe these new day opening gaps. We have this new week opening gap. Now if you macro, I'm expecting continuation. Why don't you do paper trades? I'm just learning how to read price. It wouldn't be bad, and I don't have a model. That's the main reason I don't have a model, like a clear entry model. Like I don't like I know market maker buy and sell models, of course, but I don't have like a clear entry model that like I want to enter on and then stick to that. So like I've been just back testing, tape reading, reading the price, reading the tape of how I want to actually trade. And like I'm also not in a rush. And I would say yeah, the problem with me is like when I was live trading is like I think my draw on liquidity can be pretty accurate. Depends. But the entry criteria is where I lack and where I struggle with, which is like the exact thing that ICT says is the easiest, which for me is just it's hard because like it's like, oh, do I take this one, and then I'm taking different. I would agree. I think the 2022 model is more than enough. Yo, what's good, Victim? Did I say that right? Hopefully. If not, sorry. I want to see this fair value gap get traded too. We also have this new week opening gap right here. I don't know. It's just very small. I would refer to this gap here. This is what I would rather refer to. I want to see that get traded too. What's good? Stack that moolah. Just Cam? Oh, my bad. I see. What are some upside draws on ES? Potentially this. I think that this is our manipulation move. But this is a high resistance signature. High resistance signature. So where's likely draw? I would say equilibrium. ES is just traded up into this imbalance that I was looking for. I'll look at that on NQ. Where's equilibrium? And as we can see, NQ is a lot weaker. I know there's a lot of stuff on my chart right now, but I'm expecting to see this get traded too. This is a fair value gap right here. What's this bold? Oh, Loki, oh, that's that order block. That's that. Wait. Now what is that? Oh, I think that's the weekly open. Yeah, that's that weekly opening price, which is the new week opening gap. Let's see if we draw up into here. As we can see, this is just bullish. I would expect to see just more continuation. I say to submit to that bias no matter what. But I always like I shouldn't be bringing up these lows over here. But overall, bullish delivery here. Bro, me too. My nose has been so bad today, but I'm chilling other than that. Like I've been blowing my nose so much. I don't know what this level is. Oh, 25% of this dealing range. It's your low risk entry. We left a little gap there. Immediate rebalance, snappy delivery. We create a gap right at that high. This is about to be within equilibrium of this range. Fair value gap we're entering within. I don't think we'll reject it. I really don't think we're going to reject it. It does not look like we are. And even if we do, I would not like downside delivery at all. I was expecting to see continuation until here. Once we get to here, maybe we could stall, but we'll see. This could be just a classic buy day, or we just get continuation all day. We are well above true day open, so we also could get 1050 macro reversal. That's a possibility. I'm just gonna mark it out and we're gonna watch it. We're gonna tape read it. That's way too early of a prediction. The immediate rebalance on a 1 minute doesn't look like an immediate rebalance. Oh no, that's not fair value yet. This is the immediate rebalance. We have a big 15-minute imbalance here. Pre-market or market open longs pretty much market open. Let's see if they're hedging here. They could be selling early into this rally. Yeah, I would agree with that rule, but also is a Friday. I'm just saying like short-term reversal maybe. We could have. But I don't care to predict that now. Notice how ES has traded above that 15-minute or wait, what is it? It's an hourly imbalance. Like, look at that. So now what is this potentially? A balanced price range. Fair value gap in, fair value gap out. Overall, just a high resistance area. Like, nothing that's favorable. All right, about to reach equilibrium of that dealing range on ES right now. Boom. Equilibrium. Just by looking at this, I think we do want this 15-minute imbalance. What's your trading plan? I don't have one currently, to be honest. That's why I've been just tape reading. It's more seeing what price is doing rather than worrying about like trying to get entries, you know? Because like if you're looking at the charts and you're just trying to get entries, then it could be problematic because then you're just trying to get into the market rather than looking at what price is doing. And then if you take a loss, at least me, I would be emotional. I would agree. The best way to read price is just read it without any emotional attachment to it. Like I couldn't care less at what it's doing. I'm not trying to force an entry on anything. But like, say I was in a long position, I'd be like, oh my gosh, bro, now I'm so good. It's also because I have an ego and I'm attached to my trades that I took, and then I would base my worth based off that trade. If it was a good trade, I would be like, dang, bro, you're making progress. If it was a bad trade, I'd be like, yo, maybe we're doing something wrong. When that's not the case. Which is why having an entry model is what I would say is pretty beneficial. Because then you're easily able to measure your progress. And then just look for one setup a week, 2 setups a week. And then that will slowly transform into, hey, maybe now you're catching 2 setups a week. Then now you're maybe catching 2 setups a week, 2 setups a week, 2 setups a week, 2 setups a week, 2 setups a week. And then you say, hey, now I might be able to find 3 setups a week. Then you go in and then you find 3 setups a week. But then there's going to be times when you take a loss. Maybe you take 2 losses that week. Where you're just trying to look for 3 setups. And then you can slowly go to 4 setups. And then maybe you can go to 5 setups. But even then, like, I don't even think like looking for 5 setups a week, no matter what type of trading, is like realistic. I mean, yes, it can happen, but it's not always going to be there. Gonna have to steal your entry model when you come up with one. Yeah, bro. Whatever entry model that I come up with is gonna be some sauce. I don't know, probably not. I've been leaning towards. I'm not gonna lie. Maybe. I like inversions with the logic. I also like order blocks, and I also like fair value gaps. I don't like breakers. I wouldn't enter off of a breaker. That's just me. I definitely would not enter off of a breaker or a mitigation. But I feel like that's a pyramiding type of position. Like here, you're looking at this dealing range. We've swept liquidity. Below midnight open, we already swept liquidity. Now you're looking, dealing range. We break above equilibrium. Now you're waiting. We take the high. There's nothing here. There's not any type of fair value gap. we create a bearish fair value gap, you still hold a bullish stance. As soon as we inverse that, boom, we're off to the races. And the thing is, like, the market's complex to where it's not like the same thing every single day. Which is why, like, having one entry model is, it's like sometimes it can't just be a mechanical system. We'll see though. But for now, I'm just gonna backtest until I find something that really sticks out to me. But I will say, true day open is kind of a cheat code. Oh, I thought I thought I muted my mic when I did that. My bad. True day open and then daily profiles. Open low high close, open high low close. And then new day opening gaps. I am curious about this. I'm guessing that we do create a fair value gap here. I do know Dodgy. I always have true day open, but I can never see the manipulation happen live. Always hindsight. What I would do is I would go, like, after the end of the day is over, go into your chart and literally, like, tell yourself that you did see it live. You did see it happen live. And then over time, you're slowly going to be able to see that. Because, like, right here, manipulation below true day. Dude, my nose is so bad. Manipulation above true day. Every single day. And if we don't get that in the New York session, then it's likely a day that you don't really want to be trading because there wasn't manipulation. Manipulation above true day. Manipulation below true day. Manipulation below true day. Here, that was a bank holiday. Manipulation below true day. Manipulation below true day. Expansion. Manipulation below true day. First we get manipulation below, and then manipulation above true day. What type of candle is this on Friday? Oh, is this one. Where we hit that, 4-hour order block. If we look at this daily candle, how long did it take you to learn ICT? I'm still learning, so I would say I'm not there yet. So we have traded into 20 to 30% of this candle's body. I'm pretty sure Dodgy uses the inversion. I would say for me, from what I've seen from my backtesting, is I want to see manipulation below true day happen within the New York session. For Forex, it would be a little bit different. But let's just look. Because market's not really doing anything of importance right now. Manipulation below true day within New York. Well, okay, we already went over that. 8:30, we get manipulation above true day. This is still New York. Here, this is a day to where you might have took a loss, or you might have just not have found success within this day. Because why do you think that is? If we look on Thursday, that's a full on reversal. That's a full on reversal within the market. And if you're just sticking with the underlying order flow, in trending environments below true day open, you're going to find success with that more often than you'll find failure. You'll be able to take these winning trades that are going to make up for your losses. Like, let's go to I wasn't using this tab. Let's go to like 26, or let's go to like 2012. Yo, what's good, Reno? I just want to see this. Okay, this is all when the contract's like expiring. Alright, we should be good here. See, we get manipulation above true day open within New York. And we take buy side liquidity here. There's going to be a nice, probably 1 minute fair value gap to be able to capture this expansion to the sell side here. Let's look at this. Beautiful. That's an early fair value gap before the market structure shift. Market structure, well, actually, no, market structure shift, pull back and balance right there. Beautiful. Beautiful. 2022 model above true day. I think that might be it. That might be. Let's look at the daily candle on this too. What does the daily candle look like, just for reference? Wait, was this Thursday or? Yeah, Thursday. We create a wick on that. Here, we have true day. We manipulate below it, right at market open. We trade below it, offer fair value, and then we expand. Is there any sort of entry here? I would assume there's probably SMT here. Should I? We don't have to look. What is there here? $940. We definitely have SMT. I want to look at ES. I fail to believe that we wouldn't have SMT there. Keep in mind, this is 2020. Wednesday the 6th. Look where we reaccumulate within. Wednesday the 6th of June. We do have new week opening gap too. Actually, I don't know if we have 9:30. Actually, we don't all that, and I don't think we have SMT. We have SMT here. right here, we manipulate above 830. We're above true day. Boom. Classic sell day. Classic sell days and buy days, 830 opening prices referenced. Volume imbalance here. Above, we're looking for shorts. Below, we're looking for longs. Above, we're looking for shorts. Below, we're looking for longs. Looking for longs. Alright, let's look at the charts. Wait for 1050 macro. Yeah, we have a possible silver bullet here. Up to buy side. That's still like 45 points right there. 45 points. I think this fair value gap is wouldn't be a bad entry too. But I wouldn't like to long against high resistance. Let's see if this plays out or not. How old are you? I'm 19. $19. Notice how ES is kind of consolidating? It kind of does look like a convincing high on NQ, but I don't think it will hold. I don't think ES is going to top like this. It's got to be a little bit more convincing. Silver bullet, I think the odds are in your favor here. Wow, look at where we found support. It was a silver bullet. 35 points offered. Could maybe run to this new week opening gap still. Let's see, let's see. Whoa, look at equilibrium of the implied dealing range on ES. We have a mitigation. Let's measure this fulcrum. They all agree on this -3 level right here within this new week opening gap. Or it's a regular trading hours gap. All right, ES is about to draw up into that 15-minute imbalance here. Let's see if this gap gets delivered. All right, if this right here got inversed, we could see sell side, but I wouldn't look for a reversal. But we are above true day open. We are in a premium relative to the day open, but within this dealing range, we're still below equilibrium from this high to low, but that's like the extreme. Oh, I was like, what? I'm in regular trading hours, that's why. Draw liquidity hit. That's my personal draw liquidity for the day. I'm not expecting anything at all after this. The only thing I could maybe see is these new day opening gaps get traded to, but even then, I feel like that's very lofty of an objective. Oh, I didn't even know we had 10 a.m. news. I was even looking at that. Okay, it does not look like we're rejecting that. Is ES trading up into its 15-minute? Yeah, I just traded up into that. So honestly, this could be a time in which we get something. But I wouldn't expect it for sure. I would not. Alright, it's looking like we might want to reach the equilibrium. Alright, I want to watch this 1050 macro, and then after that, we're just gonna backtest some more. And after that, I don't know. Yeah, I'm not expecting any sort of reversal. Just continuation. Where's that YouTube video I was wanting to watch? By Charmone Trades. Oh, here it is. I want to watch this. Charmaine Trades, legend, not legend. I would say pretty solid. Yeah, look at the momentum currently. Even if we do get it's not gonna be a reversal. It's not gonna be a reversal. All right, let's. I'm gonna watch some of these videos and then I'm gonna backtest for a while. Hey, appreciate the sub. Deep rot. I have no clue. Sorry.
All right. What's going on, guys? Another market review today. All right, July 11th, 2024. Hopefully everyone's doing well. What a trading day. What a trading day. Okay, you can see here on the daily chart. NASDAQ moving 600 handles today. Obviously, you can see by the daily chart a huge shift in sentiment. This is interesting because I sent a poll out in the Discord asking if you guys thought we topped here in the NASDAQ. I don't know. I'm the last one to try to predict the high in the market, but I find it convenient that they use CPI, which we had earlier today at 8:30, and they use that to run buy side, run out the all-time highs, and they they send this thing lower, quick, fast, and without any remorse. So I also sent on the Discord these 3 consecutive down close candles here. That's one bullish order block. Until we close past midpoint of these 3 down close candles, I'm still going to stick with a bullish bias, but I'm understanding that that can easily change over the next few days, possibly next week. All right, especially after seeing this here. So let's take a look at what happened. There was no telling how far this thing was going to drop. At least I had no clue. All right. If you asked me, or rather if you told me that NASDAQ was going to sell off 600 handles today, I probably would have called you crazy. This is, I'm still amazed. Like, I love this stuff.
Low-key, when I do my annotations, I can just, like, do visibility. Oh, and then on the visibility thing, I go, like, 5 minutes.
A candle like this in a while, so take that for what it is. But selling off, okay, this was NASDAQ's previous all-time high. This was our 8:30 CPI rate announcement. We run that, clearing the previous all-time high, and then the floor just gives out, and NASDAQ melts. We have this fair value gap here on the 4-hour chart, okay, and you can see the body's respecting the high of the fair value gap there beautifully. So we're going to look at that on the lower time frame. All right, so let's drop down to a 15-minute. Look at this sell-off. This is just beautiful. I was caught offside today. We'll look at that on the 1-minute time frame. Took a couple of L's. Was not expecting this kind of price action.
A couple?
But still, I can appreciate a beautiful sell-off like this. Whoever caught this or whoever was able to take something out of this move, bravo, bravo. This was amazing. But so this was NASDAQ's previous all-time high. Buy-side liquidity resting above that. 8:30, we had CPI rate announcement. Quickly, without remorse, slamming back against them. And once we got above the midnight open, smart money accumulating short positions above the midnight opening price and above the buy side. Okay, they're selling those buy stops, and it was just off to the races, lower, 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 and you can see the body stopping there at the 4-hour fair value gap in the PM session. All right, so let's look at a little bit more detail here on the 5-minute. I can't even fit all of this in my screen. We'll just we'll just scroll down as we go on. But buy side liquidity, I can't. All right, so let's look at a little bit more detail here on the 5-minute. I can't even fit all of this in my screen. We'll just we'll just scroll down as we go on. But buy side liquidity, previous all-time high. We run that at 8:30. Okay, here's your AM silver bullet hour, 10 o'clock to 11 o'clock. Accumulating short positions above the midnight open. Okay, your best shorting opportunities are above that midnight open. Okay, that's when this entire sell-off takes place. It starts off above the midnight open and above the buy side liquidity pool. We break down, bearish order block, this up close candle, trade up into that, and we sell off. Breakaway gaps, this lower fair value gap, consequent encroachment, beautiful delivery. We tap, sell off. Okay, I took a loss here on the 1-minute chart. We'll look at that. Break down again, come back up, bearish order block, fair value gap, sell off again. Lunch, if we're expecting a continuation in a sell off, always expect some sort of buy side to be ran out during lunch before seeing a continuation lower. Okay, rarely do you see a sell off in the morning, then we get to lunch, and then we just continue to sell off. Okay, if the trend is likely to continue during lunch, expect to see something like this happen first. Okay, we're dropping, we form a short-term high. Don't expect for us to just keep dropping. Okay, wait for some measure of buy side to be taken. We get that here. Okay, so traders who trail their stop losses here, above this high. Okay, they're making money, right? Trailing their stop losses above here. We're getting to that lunch hour. This always happens during lunch. Rally up, clear the buy side, punish traders who trail their stop losses too tight, and then, and only then, do you see that continuation going lower. Down close candle here is your bearish breaker. High, low, higher high. Take your last down close candle in between your 2 highs. Draw that through, breaker, coupled with a fair value gap. This is also a balanced price range. Single pass up with this fair value gap. Single pass down. So this entire portion here is balanced. Draw that through, resistance, taking you down into that 4-hour fair value gap. PM session, silver bullet hour, 2 o'clock to 3 o'clock New York time. After trading into that 4-hour fair value gap high, okay, H4, BISC high is what I have labeled there. We rally up, fair value gap, rally up again, fair value gap, clearing the buy side above this high and getting back above that not that midnight, getting back above that 1:30 p.m. opening price. We'll talk about that on the lower time frame, and then we consolidate into the close as we head into 4 o'clock. All right, I'm gonna leave this up for a little bit in case you guys want to pause it, screenshot it. Moving on, 1 minute chart. Oh man, this was just a beauty. Wasn't able to capture any of this going short, but I can still appreciate this beautiful sell-off. That's awesome. All right, so inversion fair value gap here. Okay, we rally up above the midnight opening price, clearing out this short-term high. Okay, so this down close candle, really these 4 consecutive down close candles, that creates one bearish breaker. We have a high, low, higher high. Fair value gap, draw it through. Why am I looking at this fair value gap? Well, if you look at this price leg here, it's kind of choppy. We have wicks. We don't really have a clean fair value gap in here. So just use the buy side of the curve in this price leg. Use that fair value gap, draw it through. You can see consequent encroachment. Body's unwilling to close past that. Okay, then we sell off. Now, one of the rules I have in my trading is I don't like selling if we're below the midnight opening price. All right, we're not far below it, but still I was looking for higher prices in the NASDAQ, and I was looking for lower prices in dollar. At the time, Dow was also looking extremely bullish, so I actually bought this fair value gap. I like how we're below the midnight open, and we also clear a sell side here, and I was looking to see if NASDAQ wanted to create new all-time highs, but it looks like it's possible that we might have peaked. I'm not saying that we have, but I'm having that in the backside of my mind, so take that with a grain of salt. But inversion fair value gap, trading up into that, selling off, and it's just off to the races, off to the races. Okay, we retrace. I buy this fair value gap here. We did clear out sell side underneath this low, so we just mark that up real quick. Right about close enough. You get the idea. Draw it all the way over. So I like how we took out sell side. I believe at the time dollar was still looking bearish, looking heavy, and I loved how far below the midnight opening price was. I was not expecting NASDAQ to sell off 600 handles. Okay, we rally up, retrace into this fair value gap, rally up again, taking out the short-term high. I saw that as a market structure shift. Went to go long. Okay, took all this in the live stream in the Discord, and then I was expecting us to get back above the midnight open. NASDAQ said, "You're crazy. We're not doing that today." And then we sell off. Why is this on there like that? All right, so I ended up taking a loss here and a loss here with half risk. No big deal. We sell off. Bearish order block before this displacement lower. Last up close candle. Trading up into that. Selling off again. 2 consecutive up close candles here before this rotation lower. Come back into that. Bearish order block. We sell off. Fair value gap. Trading up into there. See the body's respecting consequent encroachment. We sell off again. This is crazy. All right, and we get to the lunch hour. All right, so we consolidate a little bit ahead of lunch. If we're expecting a continuation to the downside, okay, we have that 4-hour fair value gap down here. Expect some sort of buy side to be taken first, and then expect that 4-hour fair value gap to be tagged. Expect to see that continuation to the downside. Traders trailing the stop losses here, trailing it down, trailing it down, trailing it down. All right, we're in.
Looks like we're heading to equilibrium. Hunting that fair value price. That price is at fair value. Okay, I kind of just want to watch this.
This is the uncut series of videos. Hope you enjoy.
That to be too exciting at all. Highs, higher lows, but suddenly indecision. We have on Sunday, this is a 1 day, can't really count this, but this is an inside candle, which means its reach is within the high and low of the previous day. This is your first indication of the market hesitating that might be rolling off, and after a few 4 higher highs, it's you expect that, but it's hard to judge that candle on a
What the hell is this?
Sunday and a Monday morning from a Sunday, so we just have to watch out. We may be, this is continue on. If we get a spike up through here, then I just want to be moving forward this year for the next 18 months, but with Basel IV requirements now in play and locked in for January this year for the banking sector, which means any bank that's lending money, mortgages and the like, has to, that's our target fully hit. Very nice.
Okay, 950 macro in play right now. All right, I'm really not looking at anything. Really not looking at anything. I kind of just want to get in and let's just backtest. We're just gonna backtest. I was at this day, and I'm just gonna keep on backtesting this day in price or from this day on. Just gonna vibe, chill. Where did my journal go? I'm gonna throw up a random Twitter space while I
We are back at it again. Doing something a little different today.
Oh
I'm
yeah,
moving
making
into,
ends. It's gonna be a good
Spring
space.
Series ends on the YouTube channel. I'm doing backup recordings. I'm doing kind of like this thing where I do my recordings for videos.
No vibe.
Sometimes this Twitter space thing either drops off or cuts out. And for series, I don't have that kind of subpar audio. Not that I'm always guilty of having the best audio, because sometimes I'm switching between laptops and sometimes I'm in an RV you don't know about. I'm driving around doing things. And my better opinion is always at my disposal when I'm doing things away from my house. But hopefully I'll have a clean audio with Twitter spaces for those that are here live. Those that are probably watching.
Oh, bro's audio is so messed up here.
Hopefully a clean short-term intraday setups.
Oh, here we go.
Just to study. I do it multiple times a week. That you get enough time off. I'll send everyone. Just give it that with your expansion in, but do the best news series in that circumstance. I had to work. It has to match. What we say, you try to make ends meet, and you have to match your money, your income, with that of the bill money has to match up with what your expenses would be for that month or that week or that particular day. And sometimes, individually, I've had this early on as a young man. Most of the time, I didn't have the ends to meet. I had to work 2 jobs, one full-time, 1 part-time job, and it sucked. And in trading, a lot of you are starting off in that circumstance where you don't have a whole lot of time. You don't have a lot of freedom to sit in front of the charts, and just the study is an endeavor. So I commend you for doing that, because I had to do the same stuff, and it's not easy. And it's not easy to be motivated when everyone around you doesn't understand why you're even considering it, because it seems like a pipe dream. So I'm going to try to, in this new series, and I don't know how many videos there's going to be, but I want to do the best thing I can for directing the new skill set that you've acquired. So in 2022, I've been obviously teaching you a price action model that is very simple. It's very streamlined. It's not a whole lot of things that you got to be worrying about. It's not complicated as the detractors and the people out there looking for clout want to tell you. They'll do anything to get you from learning how to do this, because it works, and it works better than everything else out there. And people are getting funded with it. And that's one of the topics I'll talk about in this series as well. I don't know what episode it'll fall in, but I will tackle the funded account stuff. I don't have any affiliation with any company, so I'm not going to rep anyone. And please don't contact me anymore. I don't do those types of partnerships. But I want to be the mentor that obviously has given you a skill set, has given you an understanding about how price should look and what you should be looking for in price. But now that you have this skill set that you're getting better at, practicing each day and week and now month, what are you going to do with it? See, that's one of the things that got me in trouble as a developing student, because once I learned how to put a trade on and make money, and initially I was doing it with blind luck, I didn't know what I was going to do once I had initial success. Have you ever considered that? It's funny because you have all these individuals out there that are going to teach you, and they very well may be good, profitable educators. They may be walking the walk and talking the talk and doing everything legitimately. But they're trying so hard to get you to be able to do well so they can take you on a pony show. Here's my one-trick pony. Here it is. This is the person I trained, and they'll rep that person. And there was a website, I'm not sure if they're still in business, but forexmentor.com. I bought every single thing from that website early on when it first came out, because I literally was entertained by the garbage that they would throw around. And so many people came through that website claiming to be good traders or educators and such. And there was one older lady, and this has relevance. I'm not going off on a rabbit trail, but there was a lady there, and I can't remember her name, but she paired up with one of the guys that was doing like coaching over there, and she learned from Chris Laurie. She learned from, I guess, this naked price action, and she got pretty good at finding very, very short-term intraday setups. And for the life of me, I wish I could remember her name. It's going to drive me crazy, but they ended up releasing a course, and something to the effect of like frequent trade setups or something. The name of it escapes me, but apart from her and Chris Laurie being the only one I thought that had a real good understanding of price action, it's beyond retail, not your classic support and resistance stuff. He kind of like shined out of all of them over there. And let me just drop this real quick. I happened to get pushed an email where someone actually went to Chris Laurie's Twitter and wrote ICT's better. Please don't embarrass me like that. I mean, I gave one guy out of the entire industry a nod, and it's not meant for you to go over there and say, well, ICT does it better. You know, I don't want that. Okay, I have respect for the guy. I think he's a decent guy. I understand he tries to stay in his own lane because he knows wherever I go, it's a carnival. Okay, and he doesn't want that drama because he knows it's not good for business. And he's run a business, you know, for a number of years trying to do what he's doing. And ultimately, I think he does a good job. I don't know what he's doing recently, but he asked me to look into his stuff. He gave me free access to it. I gave him my advice as to how he should disseminate his information, how he should teach it, and get away from the workshop stuff. Okay, he can get into, this is the content, make it approachable, where people can go in and digest it, not just go to a workshop, cram it all in there, get a book that may not really answer everything. But don't go over there and harass that guy, okay? I mean, Larry Williams was harassed, you know, because I said that he was the first real mentor of mine. You know, ICT said, you taught him personally, side by side. I've never said that. But all these ideas of mentors, okay, they teach you, like this older lady on Forex Mentor. She came up with a course that basically was taking you into a very simple little setup that repeated every single day, and she would find it on one of the currency pairs. Now, I thought that was a really handsome way of approaching price action, and she was showing a spreadsheet. She didn't show any live accounts, but she showed a spreadsheet where she tallied what she more or less made in her trades. Now, did she take those trades? I don't know. I don't care. I liked the idea of what she was trying to do. Now, I don't think she was a good educator, and they were using her as the pony that was, look, here's proof that we have something that works. But the proof was, well, lacking because there was no real account. It was just a spreadsheet. So I'm bringing that up because everyone in the industry that teaches, we all want students to do well. Okay, we want that. The problem with that is we can give them a skill set, but the personality and the real life issues that that person has to encounter every single day of their life, and whatever adversities are plaguing them, you know, their job, their work schedule, their spouse, their significant other, their children, their single parents, health problems, age,
all that just to get this.
everything
It's not even
that you may not really consider as a factor in your development. Now, when you have profitability, they start creeping in, and they will either entice you to do things stupid like it did me, spend money frivolously thinking it was always going to keep coming in, and I had cracked the code early on when I hadn't. I was getting lucky. No one taught me what to do once profitable, so I blew up. Being profitable without any direction is like a beautiful multi-million-dollar sailboat without a rudder. You're out there wherever the wind's going to carry you. And it's hard to understand if you've not obtained profitability yet, but it's a problem being profitable. It sounds like an oxymoron. It sounds like this can't be true. How can you have a problem being profitable? But yet you do once you get there. Because you start wondering, okay, well, I've been making this much, this consistently. I do have losing trades, but I come out on top over the course of the week or the month. But where do I go next? What do I do with it? The exercise of just doing it alone is honing your experience and your edge. That goes without saying. But where do you go? What do you aim for? What are you trying to do? What structure should you start applying to your business of trading? See, it's not enough to say, well, I want to make $1 million, because $1 million is not a lot of money. I've already spent $1 million this year, and I don't have much to show for it. But you have to have a goal. You have to have something to aim for. And there has to be a structure behind that. So one of the series I had intended to do once I completed the private mentorship stuff, and we're done now, that I would sit down and kind of give a public blueprint of what I wish I would have been given as a 20-year-old. Just discovering profitability, figuring out that, yes, I could be consistent with bonds. Yes, I could be consistent with the S&P. And I put away all the mega trade. I have to do only those types of setups, where the big run-ups in the marketplace. I was only focusing on that because Larry Williams said that's where I should be focusing. And because I was looking for that all the time, there was all these trades that were occurring daily, weekly, monthly, that I was really not paying attention to or even aware of because I didn't have the skill set at the time. I was profitable, but I was looking for big trades most of the time. So I would do a bond trade or an S&P trade and one contract, and then realize that I'm consistent with one contract. And you've recently saw me this year just do one contract with the S&P and NASDAQ and double the account. That was a real account. And I showed losing positions. I did all kinds of things to handicap myself and still double the account. So for some of you, 100% return sounds too lofty, but I can tell you what you've already been given is easy to obtain that. But you have to have the skill set and discipline to adhere to picking your right setups and trying not to trade every single day. I want to have a setup that gives me a consistent framework that goes into the marketplace that even a neophyte that doesn't have a long time behind them of profitability, but just recently found consistency with this model on YouTube, that they can go in and feel comfortable. This is the setup I'm looking for. It makes sense. It's there. I can engage it. And then once it gets to a profit objective, stop, turn the computer off, and go do something else. That's what I have in mind for the new developing, recently profitable student with this mentorship. But you now have a problem, don't you? You want to do more. You want to do more. You want to trade more, just like I started thinking, well, I'm doing one contract. And I was trying to make $1,000 a month to save so I could retire at 40. I was willing to put those 20 years in.
Where was this SMT at the
But
lowest?
then realized that, wow, I could do $1,000 a week with no real effort. This is a lot easier than I thought it was. Now, don't let me mislead you, folks. This is the 20-year-old that was getting lucky. And I started thinking to myself, wow, I could do this every week. And then it became, well, I could day trade the bonds. I'll look at the divergence between the 5, 10, and 30 year, and when they're diverging and I have a bias that's bullish, I know I can go in and buy it. Hint, hint, nudge, nudge. Then I started making $1,000 a day. So I'm 20 years old, and I'm looking around at my friends, and they're working, like one guy's working at a gas station, another guy, he's working at a meat market where he's cutting up meats and such. And they're doing okay, I guess, for our age bracket. And I'm doing $1,000 a day in less than 45 minutes. And I'm thinking to myself, wow, I can do a lot more if I started trading more contracts. Because making $1,000 a month, that really just didn't do it for me. Once I started doing it consistently, I was like, it's too easy. I need more, like anybody else. So I went in and started trading more contracts. And then realized $17,000 a week, that jobs are now obsolete and stupid to me. I mean, why would I want to work when I can do this? So I started trading even more.
Imbalance gets straight to, that's a soup.
I didn't have a direction as to
Right
where I wanted to go. Now let's contrast that with how I started. November 5th, 1992. Thursday evening at 9 o'clock in my aunt's family room, I cracked open that lame book by Ken Roberts, and that's not to be disrespectful, but I thought that I had figured it all out. That simple little book was going to do it for me. All it did was give me the fire to start doing it. But I had a direction. I had a goal. What was the goal? If I could make $1,000 a month and save that, by the time I'm 40, I'll have $1 million. And honestly, I didn't understand the effects of inflation. I didn't think about all those things. I just wanted to have $1 million. Because back then, $1 million, that was really something. $1 million is nothing now. Homes cost that now, and they're not even really worth it. Period. Okay, a lot of people out there on social media saying, I got $1 million house. No, you have a house that's overpriced. Okay, and the home that I purchased that I'm speaking to you in right now, I paid $638,000.
Low key. I kind of just want to sit in silence, bro, and not listen to anything. Just backtest. So as you see, we come up, new day opening gap. Then we reprice all the way back down to this imbalance. Then we soup this low as well. Manipulate below midnight open. Remember, we've had SMT here at the lows. With these lows down here, we have SMT there. London puts in the low a day. Then we get expansion, retracement, expansion. 10 a.m. comes up. Inducement. Look at that. Up to buy side. Let's grade this from low to high. Low risk entry. Oh, beautiful. Then we go ERL to IRL. Ten 50 macro. I actually think the 1050 macro is we have a sweep here. Then we have a sweep of buy side. We now have a dealing range here. All 25%, 25%. We break through equilibrium, and then we're off to the races. And then we reaccumulate more longs within the new day opening gap, and then we seek buy side. All right, so overall, Wednesday's put in a low of week. We've reversed from that. We have SMT. And now Friday, we wait and we see. We actually end up putting SMT here. Above true day open. Then displace. Redistribution. Low resistance liquidity here. So we have a low resistance liquidity signature here. We come up, take SMT, then we displace lower, we break down. Redistribution within that new day opening gap. And then we seek this new day opening gap. That is so ugly. We have a 4-hour imbalance that we hold here. Come here, we have a change of state delivery here. And we barely seek buy side there. Buy side is taken by a tick. Balanced price range. Price doesn't need to trade back into it. Displacement higher. So we get lower scan entry. We displace above equilibrium, so we're likely going to head to terminus. 75% silver bullet. But we don't really get snappy delivery there. $9.50 macro. Gives us a retracement. Here you have your breaker. Oh, beautiful. I didn't even see this. New day opening gaps. All this is happening below true day. This is a beautiful market maker buy. Low risk entry right at 25%. Accumulation at 50%. We break through that. New day opening gap right there. 75%. You get that silver bullet. And then we head to buy side. Gorgeous. And then here we have Friday. Friday does not a single thing. Sell side taken at 9:30. Look at the equilibrium price right now. I think we're just gonna consolidate. I'm not even gonna touch it. My eyes are a lot better now. Smooth edges. Friday. So 9:30 opens here after we've taken sell side. Below true day. Oh, look at that equilibrium price. $9.50 macro. We get expansion to buy side. Smooth edges taken. Come up, buy side, buy side. Sell side, relative equal lows. $20.22. At $11.50. Alright, let me just consolidate. Alright, let's delete all this. So we have a Tuesday low of week here. Monday, Tuesday, we drop down aggressively. Then we reverse. What type of news? Nothing crazy. We never take this low on NQ. Manipulation above these highs that day. That's 2022 right there, right at midnight open. Then we open here at 9:30, come back up to true day, and then we consolidate. Oh, this is a bank holiday. So it's NFP week. Monday bank holiday. And then Tuesday we've dropped well below midnight open. 9:30 opens here. No manipulation Friday below 8 true day. We used 8:30 opening price on ES for all those days pretty much. There's nothing. It's just nothing.
Your expectations for
See. I'm gonna watch some Dole ass. We're gonna watch some Dole ICT live stream.
Your expectation.
Oh, he was live this day? Good evening, folks.
Having some technical difficulties. Yes, for about 90 minutes. I'll stay with you till around 10 o'clock. So we've had the initial data released at 8:30. I was trying to get this thing to start running, and it wouldn't let me get the audio synced up. So if anybody uses OBS, you probably know what I'm referring to. Sometimes when you try to find or capture a window so that way you can share what your screen should be showing, or if you try to connect an audio device, it would populate in OBS, but it wouldn't actually do anything. So that's what I was battling. We have sell side resting just below the 18,055 level. It looks like it wants to sweep that. The 4 hour drop up into that level. Below that, if it wants to get overzealous, we have sell side right in here. So any animation below these relative equal lows, that's that level right there. Okay, so it's not much. It wouldn't take very much effort for it to get below here to reach below that. I'm wanting to watch and see how we behave this morning before the opening bell at 9:30. So it's a lot of time between now and then for price action to do a number of different things. Whenever it comes to PPI or CPI number, those reports, they're very difficult to anticipate what the move's going to be. So the way I do it is I look for what it tries to do, and you're probably going to hear the puppies in the background because they're kenneled next to me. So, and if I don't have them in the kennel, they'll be crawling all over tummies. So the report that comes out for either PPI or CPI, I want to watch and see which liquidity they run for at the time of the release. Okay, so I like the buy side up here, here, and here, because I have not abandoned the long-term bullishness of the marketplace. These reports are heavily manipulative. They're classically used to run out a major pool of liquidity, and then the other side of that coin is shown later in the day or the next day. So I'm not trying to build a case that we're going to go for any one particular liquidity before. Now, I've done it in the past. I've done it when I was on Twitter, which I'm not on Twitter. I'm not on Instagram, by the way. There's people out there pretending to be me. The only social media I have is this here. Okay, so if anyone's talking to you pretending to be me, if I'm not talking to you audibly through my live streams here or from a video I posted on my YouTube channel, that's officially got a little check mark that's International Trader, you're listening to someone that is pretending to be me. But I use these reports to try to build a premise to what I should expect, and then try to formulate a narrative. Why would the market want to go to a particular price level? And this is all cluttered up. These are notes that I have to use. I'm going to try to use this time today to explain what I did the other day, but I got backed up with personal things. So what I'm watching for is, does it have the interest to get down to, at the very minimum, below here? And if it does it want to run below here? And then does it want to come all the way back up and eat all the way back up into this to work into later in the week where we attack all this up here? There's a lot of people that have made money from this drop if they weathered this retracement here back up into this high but not taking the high out. This, I don't want to go so far as say someone was smart enough to go short, because if you're trying to trade ahead these types of reports, PPI, CPI, or anything like an FOMC report, you really are gambling. And that's not skill. That's gambling. It's no different from you sitting down at a roulette table or baccarat or for the life of me, every single time I try to remember what these things are called, slot machines. You don't know the outcome of that, okay? And you don't know the outcome of what they're going to do and how the market's going to behave at these reports. So to try to pretend you do know, that's foolishness, okay? And I've been doing it long enough to know that no one's consistently able to do that part of this, and it's so heavily manipulated. There's better ways to trade. there's better times to take a trade. So what I do is I sit back and I relax and watch and see what does it want to do. And anything that it leaves after the fact. Okay, so it's been now 11 minutes or so since the report has been released to the marketplace, and it's been a straight shot lower. It's interesting to see how they have not, as much as they dropped it here, they did not take out these lows here. See that? So I'll make it look the contrasting color. This is the very minimum I want to see it trade to, and below that. If we take out this low, if we get below here and we really expand down below that, I want to see, does it want to have the ability to come back up, then back above this low, and then I'll look at some of this range in here, maybe as much as 50 to 60% of that range. That would be what I would expect if it were to do this. Now, again, let me preface it by saying, again, it's contingent upon it going through this low and then reaching below that low. That what I'm about to say is what I would expect during the opening range after 9:30. So the opening range is between 9:30 in the morning and 10 a.m. Eastern Standard Time. So whatever local time is in New York, that's the time I'm referring to. That's what the time is set down here as well. So if you are ever in doubt as to what you should be looking for in terms of time, it should always be, I don't care where you live in the world, this is what your time should be set to. Okay, do not set it to your local time, because you won't be able to follow the things I've outlined on this channel, in the notes, in the presentations, and obviously during the live commentary. You have to be able to do this stuff consistently and find the routines and mannerisms that the price action usually tends to follow. Not always, but most of the time. So with all that jawboning, if we get below these lows and then stab below this level here, which is that low, what's so important about that? Well, we've already swept this low, went below here, and we created that low. And this pass down did not take out that low. So there's a huge pool of liquidity in the form of sell stops for anyone that has built in long positions prior to this low forming, maybe back here or even further to the left. They have moved their stop loss below that low. And they did not see that get traded to here, here, here. And as of yet today, we have not seen a trade to it as well. So there's a lot of opportunity for the market to seek liquidity lower than where we are if we can just get down to this level here. Okay, so it makes no sense for me, as someone that's studied price action for over 3 decades, to anticipate the market just to stop here because that's where it stopped before, because that's support and resistance. I don't subscribe to that view. The idea is that if it's going to go down here, it should reach below that because there's real orders resting below that in the form of sell stops, just like there's a larger pool of liquidity here. So that's why I drew your attention from not just here, because these are relatively equal, and you can see that visually. But why do I sometimes point to a low or a high beyond the relative equal highs or lows? Well, it's because of this basis here, what I've just outlined. This is where you build a premise. Okay, if the market's in a hurry, like we've seen it move since 8:30, it's reaching for something. It's not buying and selling pressure, because who's really trying to get short ahead of that report? Nobody in their right mind is trying to do that. Okay, so, and it's not a void of liquidity, as sometimes it's been taught. It is algorithmic. It's reaching aggressively, driven by time, then price, always in that order, time, then price. The move is not going to happen until it's been scheduled to move. That's what makes these markets highly manipulative, and they're absolutely controlled. They're not left to our whims and wishes. And if we could muscle the market, collectively, we would have crashed the market, okay, or the market would have went, to the stratosphere. Because those things are not seen and they're not evident, and you study all these things for a period of time that's measurable, not just a weekend or binge watch a couple videos and say, oh, I think I understand this. You have to study it in great detail, log a lot of data, charts, screenshots, watch real price action, study it, and you'll see these mannerisms. They tend to repeat all around specific elements of time. And if we can collectively agree that the market is ranging here since March, we've been just hammering inside this larger trading range. Now,
That was some
even
sauce.
if we're going higher, then price, the move is not going to happen until it's outlined. This is where you build a premise. Okay, if the market's in a hurry, like we've seen it move since 8:30, it's reaching for something. It's not buying and selling pressure, because who's really trying to get short ahead of that report? Nobody in their right mind is trying to do that. Okay, so, and it's not a void of liquidity, as sometimes it's been taught. It is algorithmic. It's reaching aggressively, driven by time, then price, always in that order, time, then price. The move is not going to happen until it's been scheduled to move. It is algorithmic. It's reaching.
It's algorithmic. It's reaching.
Aggressively, driven by time, then price, always in that order, time, then price. The move is not going to happen until it's been scheduled to move. That's what makes these markets highly manipulative, and they're absolutely controlled. They're not left to our whims and wishes. And if we could muscle the market, collectively, we would have crashed the market, okay, or the market would have went, to the stratosphere. Because those things are not seen and they're not evident, and you study all these things for a period of time that's measurable, not just a weekend or binge watch a couple videos and say, oh, I think I understand this. You have to study it in great detail, log a lot of data, charts, screenshots, watch real price action, study it, and you'll see these mannerisms, they tend to repeat all around specific elements of time. And if we can collectively agree that the market is ranging here since March, we've been just hammering inside this larger trading range. Now, even if we're going higher, say we're higher going into the end of the month, going into May, and then we get a respectable retracement. I'm not calling it a crash. I'm not calling it a bear market. I'm just saying between now and mid-May or so, I'm expecting something of a respectable retracement. And while that's not limiting and only making allowance for only going short, what I'm suggesting is I'm not trying to get too permeable, but I'm not ignoring the fact that we could have, or we're about to, form an intermediate term high where it can retrace. Now, it's an election year. Things tend to go out the window in those years. So where we see classical seasonal tendencies in the fall, in the spring, where we usually get a long, protracted retracement in the spring going into the late summer months into fall, making the fall low sometimes between the last week of August. If it's really, really bullish going into the election year, things tend to go out the window in those years. So where we see classical seasonal tendencies in the fall, in the spring, where we usually get a long, protracted retracement in the spring going into the late summer months into fall, making the fall low sometimes between the last week of August. If it's really, really bullish, and I don't see us having a really, really bullish market right now. All of this stuff that we're seeing with the market going up right now is absolutely 100% artificial. None of this move up is genuine, okay? And I know some of you that trade stock and some of you are, perma-bulls, you'll want to argue and debate that, and we can agree to disagree, okay? But this market has been absolutely driven by the Fed, and we can talk about it until the cows come home. I'm not going to convince you if you're against the idea of it, but that's really what's going on. The Fed's just pumping this up. At some point in the future, real soon, things are going to have to sort themselves out. And it's being built up in a manner where when it does come home to roost, it's going to be fast and furious and bad, okay? And it may not be tradable. It may be, in a manner where, you just smoked and that's it. So I'm trying to balance all these things because if you look around in the United States, things are not going like they should. And even Democrats are waking up and saying, what the hell is going on here? This isn't my country. What's going on here? And all these things, these policies, all these control measures that are being implemented in unconstitutional ways, things that are being changed financially, taxes and things that are being, proposed to come against us. This bastion that we're all basking in right now, which is trading. I mentioned in many Twitter spaces that this isn't going to be exempt, and it's nice for us to be able to sit down and watch these squiggly lines and come up with an idea where, we're trying to predict the future and somehow profit from that. That's a way to make money outside of the 9-to-5 grind that they want everybody chained to. And some of you are championing all these ideas about minimum wage being raised to $20 in California. Well, that means your French fries and your hamburgers are going to go up a lot more, and everything else is going to go up more. So you're not going to outpace it. It's designed to cause all kinds of difficulties. And some of you have noticed, what I've also mentioned in the Twitter spaces, that these funded account companies, have you noticed how some of them are having difficulty? And have you noticed that I have students that are raping them over and over and over again?
What?
That can't go on for a long period of time. The more people that learn how to trade and are able to be consistent, to me, and just a shout out to Matt, Trades by Matt, I saw your thumbnail. Apparently you're smashing it. Well done, lad. Well done. That type of thing is unsustainable if the growth of the traders, because let's be honest, okay, these folks are making their money from the resets and the purchases of the attempts to do so. And over time, traders that invest time and do their due diligence to learn how to trade these markets, they will overcome that model. They will. And especially if a small group of them are collectively doing the same type of thing, if they have like a hive mindset, and they're doing those 20 accounts. And look what Trade by Matt has been doing. Apparently he's only doing a small little sliver of a move, but he's doing it compounded by like 20 accounts. And if you're doing that, and he's not aiming for a lot, which is exactly what I said before. And I'm saying he's trading my information, so don't take that out of context. But I'm saying all you need is a small little cookie cutter. One little cookie cutter, that mold. If you can find one thing that repeats for you, then you multiply that. And that's done by money management. Well, since you're not really trading with real money in these funded accounts, you're purchasing the participation in up to, and if my understanding is correct, if I'm correct, I did watch a video a month ago, and he was stating he was working with 20 accounts. I don't know all the dynamics with it. I've never done a funded account. I never would do it either. But whatever he does in one account is being copied. And that small little move of $200, less than $300 or whatever, over 20 accounts, he gets it and then he stops. That's discipline. That's not a gambler. That's someone that's looking for their little, it's a cookie cutter shark. I've used this analogy too. A cookie cutter shark is like this little sea snake looking fish thing. It runs up on anybody. Any fish that's in the ocean, it's opportunity to eat something. It runs up, slams into it, bites a circle, piece of flesh out of its body, and it runs away. It don't snack and hang out and have a cookout. It's going in there, hitting it, boom, surgical strike, it's out. It's got its meal, it's gone. That's what a professionally minded trader does. They're not in here trying to do 15 trades so they can go on social media and say, look what I did. They're not in here trying to do feats and wonders to look like an ace in front of everyone. They're going in there, taking 1 pound of flesh, their pound of flesh, getting it, done, and I'm leaving. They're not looking to see how many times they can get it right in a day. They're not trying to make a specific dollar amount for the dollar's sake. They're looking for a low threshold objective, a very low hanging fruit objective. And when that's achieved, They're done. They move to the sidelines and they wait for another day, another opportunity. And they're not in a rush to get in there. And just because it's a new day, the bell rang, it's 9:30, or it's been 30 minutes and now it's done doing its opening range. Now there has to be a trade, or there has to be an entry for me because ICT said there's a fair value gap, silver bullet trade between 10 o'clock and 11 o'clock every single day. There is, but it might not be on the lower time frame, less than 1 minute that you're studying, or you might not have the aptitude to see it real time. And you'll be able to see it after the fact, and it'll probably be a means of frustration for you because you should have saw it in your mind. You should have saw it real time when you haven't done this enough to have the experience to see it real time. And that's the part that growing pain. A lot of you don't want to go through that, and there's no way around it. You can't circumvent that. You can't shortcut it. You can't buy a book or a course or someone else is reading or watching my videos and they're going to give you the Cliff Notes version of it. That shit doesn't work. It does not work. They'll sell it to you like it is, but you'll find out with the results it doesn't work like that. So you have to go through that grind. You have to go through it. So when we're looking at price action, we're looking for, number one, there has to be a premise to why the price should be doing anything. And that gets back to, should this be a large range day? Should this be a small range day? Should this be basically an indecision day where price is indecisive about where it wants to go higher or lower? Okay. When we're looking at price action, we're looking for, number one, there has to be a premise to why the price should be doing anything. And that gets back to, should this be a large range day? Should this be a small range day? Should this be basically an indecision day where price is indecisive about where it wants to go higher or lower? Okay. That takes some experience, generally looking at higher time frame charts, monthly, weekly, daily, and getting a feel for what the market tends to do in those higher time frames. It doesn't take very long to do that measure of perspective or obtain that type of experience. You can usually garner that by 3 months of just learning how to trade and watching price action and studying. When you move below that daily chart and you drop into like a 4-hour chart and then to an hourly chart, it's going to take you around 3 months just to get familiar with that time frame in reference to what it does on the daily, the weekly, and the monthly chart, and how all those things fit together. If you do all of your trades based on the framework, the premise, and the narrative around that time frame. Now, let me very, very specifically say what I just said again in different plainer terms. If every trade that you're trying to take is either going long or going short based on the information that you gathered from the 60-minute, 1-hour chart and higher, you're going to filter out a lot of all the things that you're probably getting beat up by right now. You see me, my students, you see my teachings where I'm using a 1-minute chart. But I'm taking for granted that you've already studied all of the core content, all of the lessons, all the playlists where I'm talking a lot about how I'm really looking at what that weekly chart should be trying to reach for, expanding higher or lower. And I'm not trying to predict the closing price on the weekly chart, but I'm looking predominantly if the market's likely to go higher on the weekly chart. Even if it goes up higher to take out a high, I don't know if it's going to continue after it goes there, and I don't really care. If there's a range of opportunity for me to see where it opens on Sunday, or using the opening price at 9:30 on Monday, there's 2 opening prices there. Whatever one you want to use. If you want to be highly, highly sensitive to what the market will likely do for the weekly range, then you use the Sunday opening price. And that new week opening gap, if it's there, extend that through all the way till Friday. Those points of data are going to be influential to what price action is likely to do for that given week. But that's not taking into any account what your experience level is going to refer to for, is this day part of a week that's going to be trending where it's going to has a lot of range to trade to for a weekly objective. So in other words, if the weekly chart or the candlestick or range or bar for that weekly range, the highest high and the lowest low, the coming week that you're about to trade in, if it has the potential to move 400 points, or 400 handles rather, then that means that the majority of your focus should be trading in that direction, whether it be higher or lower. So if it's likely to move 400 handles for NASDAQ for that weekly candle, now you don't know, and I don't know, if it's going to literally move those same 400 handles in that one given weekly range. It might go a large portion of it, stop, stall, retrace, and then the following resume and go into that continuation. And that's part of understanding what that monthly range is going to do. So all these things are fractal mindsets and little components, small little cogs. It's part of the machine that we look at in terms of the price continuum. If it's going to keep reaching for a high time frame liquidity pool, you want to trade in that mindset. It may not be liquidity. It may have already taken liquidity, and now it's just going to reach for an inefficiency and then resume reaching for an opposing pool of liquidity. And it sounds very complicated, but it's really not. What we're only doing is simply looking for the higher time frame monthly and weekly to give us some kind of inclination that the market wants to reach for some obvious stop above or below the marketplace. And if there's any inefficiencies in close proximity, we have to account for that because it will want to go back into those points. And I'll talk a little bit about inefficiencies and such, and I'll teach you really what I was using the other day when I recorded it. But this can't be emphasized enough that when I'm speaking or I'm showcasing something.
Yo, low key, I'm gonna end this stream right here. I don't know. I feel like I'm just not locked in, so I'm gonna take a break. I'm gonna end stream, and then I might come back later, but we'll see. I'll definitely be back tomorrow for a longer live stream, but I'm just not feeling that locked in, so I'm not gonna sit on my wait. Hold up.
we have a target. This is very likely gonna be our high probability target. The high of the CB. Low of the CB. And that's it. That's the only thing I'm gonna take from the 4-hour chart. When price is like trading here, that's when we can expect to see resistance from here. But first, price will have to come to this level at 24.94. On hourly chart, we have more targets. Another unfilled fair value gap. We have a week that has no price action inside it, so we can expect to see price trading
Tomorrow,
this week
24-hour
first before pushing
stream.
higher this week. That's what we saw yesterday, right? Price, we measured the week, news week from hourly chart, and price rejected from the lower quadrant. Remember yesterday? So that's what we do when we see a week like this. We measure it, and usually the high probability support comes from consequent encroachment, but it can also come from the upper quadrant. Yesterday, the resistance came from the lower quadrant.
24-hour stream would be insane, but the reason why I wouldn't want to do it is because it wouldn't get uploaded to my YouTube channel.
So not necessarily like price will have to reject from.
Because then I'd just be like streaming to like not get a video uploaded to my YouTube channel. But I mean, I guess it would still
like price
be.
to go below this
I'm
upper
19.
quadrant. Our signal for a long from here. See price respecting this breaker, price also respecting order block here. Bullish order block. And we also generated a couple of relative equal highs, right?
Appreciate it.
Also inside
Appreciate
our 850 MAC, it's lagging, really. But what I want to see, alright, what I want to see, price action inside this week. Want to see, right? Took on stream on. We could see heavy resist. That's all. I don't know why I. Drop. We'll just have to be patient enough. This inversion getting respected again and again, like very strong support here. I think. If a small fair value gap as an inversion, don't think like price will be trading into this. Activating another order block here. These down close candles.
I'm gonna create a mental log today. What I just want to see what trade you took.
Image order. In 1 minute, but we have.
This guy
Price
is so
not
patient.
moving after 10:30, that we are in a loop. Get ready. Everything is recorded, folks. All right. And then prior to that, we had 3 trades, 2W, 2 losing days, then again W. So I think the max losing day out of screen, I'm mentioning to you.
Many times I don't do a good job of reminding you that I'm referring.
I want to make a mental log. Then after that, I might dip for a minute. I'm not gonna lie. I'm not that locked in. What I want to talk about today is that for me, the end goal for me is not to get funded. Like being funded is just gonna be a little step to my journey. Like I don't know why. For me, being funded is not the end goal, and I think other traders put a lot of emphasis on trying to be funded. Like, are you funded? Did you get funded? Oh, I'm funded. But for me, that's not really the end goal, because I think being funded is just a byproduct of you being a successful trader that has your model. And that's why I've been so patient and so diligent with my journey, because I went right in and I tried to rush it. I was trading options and I pretty much just blew a lot of money for no reason. And then you have these funded account companies that try to reel you in and try to get you funded so then you can potentially get a payout. But I don't know about the mental log today. What should I talk about? What should I talk about? I'm gonna give like a note to my future self. All right, this is day 5, and this is simply for my future self. I've done a video like this before, but I'm gonna do one again. I want you to make me proud, bro. I want you to make me proud. Make me proud. This is a video for my future self. Stay true to yourself. Just keep on working. Keep on improving. Your results do not mean anything. If you think that you're better than you are, you're likely worse than you are. And just keep on going. Just just keep on making me proud and keep on working towards the life that I want right now for you. And just don't stop. Just keep going. Get up, keep going. Get up, keep going. If you get knocked down, keep on going. There's going to be struggles. We know that. There's going to be struggles. There's going to be ups and downs. But throughout those, I just want you to stay true to yourself and just know that I'm proud of you for what you do. And hopefully you can look back on this video in the future and be like, man, wow, I was at that point in my life. Yeah, it might be a little bit cringe. It might be a little bit corny, but I do not care. That's all I really had to say today. This is my little mental log for today. I want you to make me proud. I want you to make me proud. Anyways, I'll see you guys in the next one. Have a good one. The headset dent? Yeah, bro. The dent from the headphones is every single time. Like, I have to full on take a shower no matter what if I want to go outside. I think it's mental log day. Let's check in on price action right now. Look at the respect to equilibrium of that. You cannot tell me that that's not something to notice. Actually, let's hold up. Let's hold up. We have an inversion right here, and we have displacement now. Do we have SMT? If anything, it's a little SMT. I don't really like this. I think I wouldn't look to short this. Really, but we might have an original consolidation over here. I don't know. It's a Friday. Already got the piece of the pie that I would. Oh shoot, I'm not live. I already got the piece of pie that I would look for. I'm not really looking for anything else here. I'm gonna take a break. I feel like doing that, and I feel like I don't need to be obligated to go live for 12 hours every single day, every single session. So I'll be live maybe later today, but I might just record some behind the scenes backtesting videos. I might create some like videos and record those. And anyways, I'll see you guys next one tomorrow. Tomorrow I'll for sure be live for the full 12 hours that I like to do. Anyways, hopefully y'all have a good rest of your